Hello, this is Robert. I'm a tax attorney here at TRP. We're going to be answering the question, how does the IRS collect back taxes? So, is it individual or automated? Depends on the balance. The way your collections case is handled depends on the balance and tax type sometimes. Regular income tax, balances under $100,000 are going to be assigned to the IRS Automated Collections System. Balances over $100,000 are going to be assigned to an IRS revenue officer most of the time. Sometimes you'll see cases over 100,000 that are still in the ACS system. So payroll tax, often assigned to a revenue officer even for lower balances. So cases under $100,000 are going to be in the IRS ACS system. This is a system mostly run by computers but staffed with real people. IRS ACS can issue garnishments and levies to collect the tax debt. They also issue liens to secure the IRS financial interest, although the liens aren't really taking anything away from you. They just show up on your credit report and on stuff you own. ACS should be called immediately upon starting your case if your debt is in collections. Some tax relief companies do not actually call IRS on your case. All they're doing is preparing and mail the paperwork. And the problem with that is there's a lapse of time between the IRS actually receiving and processing your paperwork and them sending it. And in that time period, it's possible that they could issue a garnishment or a levy. When called, they'll almost always give you a hold on collections and a callback date. As long as you keep sending in the info they're asking for, you're pretty much usually not going to get levied or garnished again unless you just don't submit complete information and you just drag it on. If things are complete, you're good to go. Cases with balances over $100,000 are typically assigned to a revenue officer. These are some simpler cases. There are some simpler cases that might stay in the ACS system, but most of the time over 100, you're going to be with a revenue officer. And that's an individual agent. They're from a local office. They get directly assigned to your case. They may come to your home or place of business to make contact. Sometimes they'll leave a card if you're not there. But realistically, almost all of them are totally fine with just fax and phone calls, and most of them, I think, even prefer that. I've had one person that actually tried to do an in-person meeting, and we just actually showed them the code that said it wasn't really required, and everything was fine. Revenue officers like ACS can issue garnishments and levies to collect the tax debt. They also issue liens to secure the IRS financial interest. The agent should be contacted by your representative immediately if someone is representing you. They will give you a time to respond with documentation. If your representative keeps responding and providing information, the case again should go smoothly. So IRS revenue officers are assigned to payroll tax debts, even sometimes when it's under $100,000. And the reason is the IRS only has a few years to assess someone personally for the tax debt on payroll. And payroll taxes do not die with the corporation or LLC like some people think. They get assigned personally. And this is the issue with sales tax as well. Sales tax, although that's not at the federal level, also gets assigned personally. Garnishments are sent to employers and or Social Security. They can take a portion of your funds until you set up another arrangement with the IRS. So garnishments are taking some kind of payment that you're receiving, typically from like a W-2 source or Social Security, that kind of thing. They can't take veterans' disability. That's something they can't get to. Or government benefits. Levies are a complete taking of whatever is there up to the tax balance. Bank accounts, whatever's in there up to the tax balance, merchant accounts, accounts receivable. The IRS comes in and takes what they can. It is then applied to your tax debt. Self-employed people will sometimes see all their income taken away, especially if all your money's coming from a merchant account. You got a website and all your money comes through there. Well, they're just taking it all until you do something. Liens are basically the IRS proclaiming their interest in your property. They also file a credit report lien, so any potential lenders, anyone looking at your credit report, they're going to be aware of the debt. The IRS almost never takes personal residences, contrary to what some tax relief ads and some fear tactics might make you think. Personal residences, if you live there, very rarely they're going to take it. I've even seen clients with $1 million plus homes that debts have expired on them when they're paying less than they're paying an amount that's not going to pay it off before it expires, and they still don't come and take the home. So you can stop the IRS from enforcing collection. Take action yourself or hire someone to help you. You can also see our comprehensive tax help guide. We'll link to that below. Not sure on your best tax resolution? You can have us help you by calling us at 888-515-4829. That's also 888-515-4TAX. Or visit the contact page link below. We can let you know if a settlement is a good possibility or not. There's no obligation. The consultation is free. And you'll definitely leave with a better understanding of your options either way. Thanks for watching. This is brought to you by Tax Resolution Professionals, and you can go to our website at trp.tax. Have a great week.